Good afternoon, everyone. Today is the 17th of October. So we are in the third week of October already. And we are going to talk about during this webinar a little bit the bias that we have based on the analysis that we are doing for today's session, and maybe finding ways to be able to shift our bias and not to be kind of married to them throughout the session, right? Which may lead us to avoid some losing trades, some mistakes, and not to be kind of forcing the market to do something that is literally showing us, if you actually pay attention to it, to what price is doing, maybe showing us that this is not, our bias is not correct for the day, and we should kind of find ways to, or how to deal with that situation, right? It's going to be stop trading. It's going to be being humble enough to change direction. If you're, for example, bias that price may go to the downside, and all of a sudden you see that rejection and you see price going to the other hand and actually breaking highs, are you going to be able to quickly change your mind, or what clues can you identify that maybe gives you that indication? And how do you approach that? Are you going to just stop trading because that's it, your bias no longer is validated for the session? So it's okay to stop trading for that day and try to then reassess, redo your analysis maybe for the next day? Or are you like confident enough to maybe just flip it and start looking for new opportunities as market is evolving into the new direction? One of the big mistakes that you can do sometimes when you have this strong bias is exactly that: keep trading your bias and ignoring everything that price is actually showing us, which is maybe the opposite. Or the other one, which is one is marrying your bias, the other one, it would be to change bias way too fast, which is going to lead us to be chasing prices as price is evolving, right? This price all of a sudden is moving to the upside quite fast, quite quickly. Maybe think, okay, price now wants to continue to go up, to go higher, and all of a sudden price change direction and starts going down, kind of in a fast move, and you're going, okay, let's just change my bias again, and now starting to go to look for shorts. Like changing your bias way too quickly as well within the same trading session can be dangerous as well, right? Because now you're going to be chasing price. Maybe you're going to start going long as you start seeing price getting some momentum. All of a sudden price flips too fast. Now you get stopped out, and okay, let me actually go short. Maybe my bias was incorrect. Now you get in this trapped into this situation, right? So there is those two issues that maybe may occur with being trapped into one direction. One of the examples now that I'm going to give is, for example, Mohammed, the way he traded S&P last Thursday during the CPI data, when we saw that the S&P had that strong move to downside. You can see this big gap, right? The indices completely reacted to the downside as soon as the CPI data came out, and all of a sudden, as you can see, it completely reversed, right? A few minutes later, it reached maybe some key level on the left side, and because maybe because Mohammed was focused on the data that came out, it was higher than expected, which in theory would be a negative outcome for the market, and it was initially, but then price found a way to reverse. And if you keep looking for sales on the way up, that's of course it's going to lead to some mistakes. On the other hand, for example, for me, Friday, due to not being 100% focused on the market, I was doing some webinars and so on. I didn't pay attention to some levels of structure that I didn't manage to identify that some key levels were broken. So kind of, as you know, how I look at the market. So new space was being created. Because I didn't pay attention to those levels, I was caught up on changing price. Price actually on Friday moved quite fast as well, ups and downs, especially like on the dollar, as you can see, on euro sometimes as well. So when price was going up too fast, I was kind of, okay, maybe price actually is about to break the highs. Let me start looking for longs, and all of a sudden price respects the highs, starts going down, and I was getting trapped into this situation, right? I don't usually get trapped into this situation because I like to identify those prices, bigger picture, so it gives me a little bit more direction of what price is doing, and in that sense, I managed to stay 1 or 2 steps ahead of the market. If I don't do that, if I can easily get trapped into this, and now I'm just chasing price, and it's exhausting mentally. I didn't really trade it. Actually, I had one was in between that chasing, but I didn't really execute that many trades. However, it's mentally exhausting just to going around following price ups and downs, because you can get up pretty easily in the wrong side. So yeah. So in this point, how can you provide, or how can you prevent to be trapped into that? How should you approach your trading day? That's more of the question of today's webinar that we should kind of try to answer, which is yes, it's good to have a bias. At least that's my opinion. Nevertheless, it's good to have actually more than one bias, and more than one bias, it will mean define maybe 2-3 possible scenarios that you may see, or that you would like to see happening during the today's session, or for each session, or even for the week ahead. You can also do this exercise on a weekly basis. During the week, and just go to the higher time frame and try to identify some key zones that you would like to see price respecting or breaking it, and then you can create some scenarios with it. So create 2-3 scenarios. Can be from the weekend or on intraday session, or even intraday. So you can start from weekly, maybe intraday, and then even intraday you can go and define 1 or 2 scenarios for each session. Like on that session, what would be your game plan, your bias, and then for the US session as well, what would be your game plan, right? You can adjust it as well in that regard. So you can even go from these 3 time frames: weekly, intraday, or daily, and then into these 2 sessions. Now, what you want to do is create those 1 or 2 or 3 scenarios that you want to play out, that you would like to see to play out, and maybe allocate some kind of probability into it, right? For example, we had that movement on Thursday, and we have the CPI. You could, before the news event comes out, you should already have kind of 1 or 2 scenarios that you'd like to see happening, and allocate some kind of probabilities. Like, for example, okay, I think the CPI, like based on what I see on price and of what price is doing, I think I'm expecting to see the indices to go down, for example, because I want to see these walls being broken, and there's maybe something on the left side that I would like to see being respected. On the other hand, based on the fundamentals as well, I think there's a probability that the CPI data is going to come out stronger than expected, which also would lead to the indices to go down. And maybe as well, I'm expecting some strength on the dollar, right? You can start creating these different types of scenarios, you can create different scenarios, and these will be things that you would consider on how to create those scenarios, or why that's your bias, right? So how can you create your bias is exactly that. Look at the technicals, look at the fundamentals based on your strategy as well. This is how what you would like to see, and if this and that starts happening, then you have your own strategy, your execution on how to maybe participate on that move. On the other hand, you could allocate like a 70% chances that this happened for the CPI data, and then after that you would try to find out as well, if that happens, where would be my target, and this would be the second part, how that would be invalid, right? What do I need to see price doing to invalidate this point? Let's pretend that you are looking for the sales on the S&P as long as price doesn't break these highs. If price had broken these highs before the news, you are no longer looking for the sell, because maybe that's already indication that maybe price want to go higher. That could be, for example, one key factor of invalidating that point. of looking for sales just before the CPI data, right? Then maybe you can create another filters that you can include in your own strategy. After the news as well, looking for where price is coming from. It's maybe another scenario that you can see, okay, now price has been reached, or kind of target maybe has been reached from the sell. Now what can you do, right? It was a strong move down. 1 second. Yeah, pound just broke the highs. As we are talking before, pound just broke the highs. Yeah, so maybe price now it reaches target, and what would that be the invalidation that you would need, right? So at this point, for example, if you were still biased to look for shorts, but as you see this rejection, maybe there's maybe 2 levels in here that maybe you would like to see being respected in order to look for more sales. Maybe the retest of this previous level support resistance, or maybe the retest to close this gap that we had in here. Maybe these 2 would be, or maybe 2 zones to look for sales, but then you can still wait and see how price is moving towards your levels, right? You can see the strength of on the way price is moving. Maybe that will be straight away a sign that will tell you, okay, hold on a second, let me actually reassess what I'm seeing, because my buy is to look for more shorts. It doesn't look like that price is actually behaving in that way. There's way too much strength in here, and if you then have looked at the other assets as well, you would see that dollar index as well is now moving quite strongly to the downside. Euro is moving to the upside, and so on and so forth. So there were another assets where you could have gathered some more information to confirm this bias of, hold on, this is quite strange. Like we had a really positive CPI data that was better than expected, but all of a sudden all the markets are actually reacting. After the first move, price actually is reversing. So let me hold my breath in here, and let's try to reassess what may happen, and maybe what will be the indication for you to quickly change your mind, right? Maybe that will be enough as soon as you maybe see this high being broken to start maybe looking for longs, or if you see this high being broken from the news, maybe you could have completely shift your mind at this point and start looking for those ones opportunities. Maybe, okay, maybe price actually is moving quite fast. You should be already aware of maybe where is the next level of structure that you'd like to identify. After the break of this, maybe retesting this level to be a natural zone to look maybe for a target, and until price gets there, is try to find out ways to actually capitalize on that move there, right? That depends on your strategy. So yeah, that could be one scenario, right? And on the other hand, even before now I start asking questions, or going into more details of maybe some mistakes that was made in there, I'll take a look at euro dollar and my mistake that I did, which was chasing price all around, right? So I was not, we had all those mentoring sessions in the morning or webinars. I didn't realize that price had actually broken this low, which kind of would maybe give me some indication that price may wanted to go a little bit lower, or at least look for sales on the retest of this high. And I didn't notice that. And because I didn't notice that, when I saw price going or moving quite fast from here, making all this strong move, that's what I was looking for. I was starting already to look, okay, if price breaks the highs, let me start actually look for long. So I just waited. I didn't look for shorts because I didn't notice this. And so it took me away from actually a great trade to be looking for shorts in there. And all of a sudden price now starts moving away. Now it's in the middle again. Now I'm actually flipping. Okay, maybe this high actually holds. And now I realize that this has broken in there. So let me actually start looking for shorts. And all of a sudden I get lost in here, trapped into just chasing price up and down. Not getting entries at the best zones, which would be kind of the extremes, not waiting for retracements and so on. So I start getting trapped in here, and this will be kind of changing bias way too fast. And one of the reasons that may happen is because we are not analyzing price on the bigger picture. So we just get too trapped into this maybe 5-15 hour time frame data that is coming out, and that can easily lead to bad trades as well. So as you can see, maybe one common factor that we can use to avoid this, it would be having a higher time frame analysis done, that can help to identify what we may expect from price, at least the direction, the overall direction. And if you see by any chance any quick fast move up, maybe okay, this doesn't really is going to scare me, or at least I'm going maybe to try to see, because maybe there is already some break in there that maybe price can push down. Yeah, and this is euro dollar as well. It was there was another one, pound dollar. It was similar. I was just changing price up and down, and so on and so forth. When you are when you do everything kind of correctly, if you have your higher time frame analysis properly done, if you have these game plans that you can maybe define on every day you approach the market on an intraday level, now you can actually, and if you allocate these different scenarios, different probabilities to each setup, if you know more or less what you would like to see in order to define, this is my bias, this is what I want to see, this is how I'm going to execute the trade, and this is my target and stop loss. And if something is invalidated in this case, maybe now I'm going to flip, and this is my other scenario that maybe I'll try to capitalize on it if price does this and that. Like if you could approach every trading session like this, you're going to be, first of all, more relaxed. You're going to be able to be kind of one step ahead of the market and identifying what it may do. And as price is evolving, as price is moving, we're just kind of taking charts, like checkbox of saying, okay, price has done this, price has done that, and now I'm going to look for the execution. And then you have your own bias based on fundamentals as well. And of course, you want to try to trade the scenario where you have higher probability, but at least if that doesn't happen, one of two things can happen, which is, okay, you just don't execute the trade, and it's okay if you don't execute the trade because price didn't do what you wanted, or you manage to completely flip sides, change your mind, and for example, you're looking for shorts, now you're actually going to start looking for longs. So yeah, that would be a way to approach it. Yeah. Mohammed, any questions so far? All right, so far no questions. Yeah, it was a long one. So the S&P, right? So you actually got kind of married to that bias of the looking for shorts. We saw that big move down. And one way to Mohammed saying, yeah, the fact that you have not only one scenario is a thing. And it's true. If you approach the market just with if you just approach the market just with one specific bias, and if by any chance price is not moving into that direction or not providing the type of movement that you would like to see in order to trade it, you are going to get trapped almost for sure, and you're going to start forcing trades unless you are super disciplined with your own strategy. You're going to start forcing trades or forcing price to do something that is not showing you that it wants to do, and that will lead to bad trades, and that will lead to losing trades most likely. Right, so that's like forcing. One of the biggest mistakes that you can do is forcing price to do something that is not willing to, or is not showing us that actually it wants to do that. That's one of the biggest mistakes. Everyone can have those moments. However, as you progress and as you get more experience as well, you should be able to start removing those bias, those behaviors from our own trading. Because in this case, it's actually not about your own strategy. It's actually about you, the trader, being biased on the way it's approaching this trading session. So regardless of how beautiful or great your strategy is. If you approach the market with that approach, most likely you're not going to perform as well as you should. Yeah. So yeah. Or if by any chance, for example, sometimes you may have that bias. For example, let's pretend that you like to trade the London and the US session, right? Or let's pretend actually that you only trade the US session. However, in order to trade the US session, you start making decisions or start making your predictions, in this case, predictions based on what's going on during the London session. So if you have your own bias for the London session, in order to prepare you to execute trades during the US, and if that bias doesn't occur, it's okay. Maybe this day you are not going to open trades, which is perfectly okay. There is no problem with that. But if the bias starts happening, and if you get that opportunities, great, go for it. So that could be something as well. Just kind of having one bias. So having one bias could be okay as long as you know when your bias is no more valid and when it's invalidated, and how you can prevent your own execution from getting trapped and avoiding those trades that price is literally going against your bias. So that would be something that we could work on, right? And for example, one of the things that we talked, and this may depend, of course, on each strategy, on everyone's strategy, which would be waiting for that confirmation, for the execution confirmation, right? So I'm looking at your trades at this point, and I noticed that you look at the 5 minutes chart. If you literally try to, I think you try to get short somewhere in here, get short somewhere in there, and then maybe get short somewhere in there, right? If you just look at that entry confirmation, and we have talked about that a few times, which is if you're looking for shorts, just wait, regardless of, it's important that price is reacting from something important on the left side, but regardless even of where price is reacting on the left side, if you just wait for that at least low to be broken, just as a confirmation to see the reversal, we are talking about, in this case, reversal setups. In this case, actually, it will be kind of a trend continuation setup because he was looking for shorts after this big move down. However, as price is evolving in here, you want to see that break. You want to see at least price breaking a low to get, okay, we have a low broken. Maybe now it's time to start looking for the sell again. Maybe try to look for the opportunity to regain, to rejoin this move to the downside. So you want to see that happening. You want to see that happening even before you actually break a high in here. Like, for example, this will be kind of the last high in here. There's a big gap. So as soon as you break this high, there's a high chance that price wants to feel at least the base of this level, which was where we had this previous price zone in here. And then, of course, to feel actually the origin of this gap. So it would be nice to look for a trend continuation still underneath this high. As soon as it breaks this high, at least maybe wait for here, and then maybe rejoin there. Unless we actually start seeing price literally breaking one or two lows, that I can give you, okay, maybe price actually is about to continue to flip and to go down. In this case, none of that actually happens. If you just follow on the 5 minutes, price turns in here. We have maybe this low. We have a few weeks in here, but this is the next one, and this would be kind of the next one. And then you break, and then another low in there. So there's actually, on the 5 minutes at least, there's actually no low being broken until to give us any entry, to be honest. If you go to 1 minute, that may be a little bit different. I think there's maybe one low being broken for here, even though it's almost invalidated straight away. Because we have this, so price evolves, we have this demand zone, price respects it, and it kind of starts this compression zone, and price goes in here. Maybe, this is compressed, but maybe there's this demand in here. That's actually where price goes to. Okay, in this case, maybe I would accept maybe you see this low being broken and you want to join. So the first sell that you took, it will be almost, okay, I accept it. Even though it just broken this high, which is a little bit dangerous. that I would accept it. After that, any other sales that you have, I think it was maybe straight away just after this or something like that, there's no loss. If you just follow price, there's absolutely no wall being broken. Price is just moving, it's just respecting. And this one, it could be maybe easily avoided if you even look at these 5 minutes, for example. We can have this weekend here. This is the demand zone that is fresh. 15 minutes as well. Price never even broke at the low of this 15-minute candle. It's another way to filter it, and then so on and so forth. So that will be straight away a way to prevent the sell, or to try to avoid sales. If price wanted to continue to move into this direction, more often than not, you would see then, okay, price breaks one, goes up, price the second one, maybe can look for sales on the second time, maybe price zero traces and continues. If price doesn't start breaking any lows, the probability to actually break, to continue down, it gets reduced. Another way to be, okay, price is actually, and I think you mentioned that as a self assessment, that you said, yeah, after actually, if my bias was short, if by any chance I open a trade and I have a loss, let me reassess quickly if my original bias is actually still accurate, right? So after you got your first loss, let me just quickly see, should I still continue to look for shorts, or actually price is actually about to flip? Or if by any chance I still want to look for shorts, okay, these maybe retesting this level or retesting this level, it will be the new zones that I'll be looking for. And I want to see price doing something before I even try to attempt to look for those sales. Another situation, of course, I think, as I mentioned, is where is actually this low reacting to on the left side? Is it reacting from a good level? Yes or no? Which maybe it's straight away to, okay, forget about my reason to sell. 3,500. Yep, it was a beautiful zone, right, on the left side. That round number, kind of round number. And it was a really nice zone on the left side where price reacted from. Yeah.
You know, at that moment, that my bias was so strong because of the CPI data. So I was like, it should be a short, you know, like the bias was so strong in my head because of the CPI data, which was like higher than expected. Yeah, I was not thinking about even like a trend return, you know.
Yeah, and sometimes that may happen, right? We completely get lost. Either can be a really fast move that you were not expecting, or actually some news come out and you are married to that bias of the news. This is what price should do. And for example, literally, I know a little bit your strategy. I know that we talked about these confirmations before even entering for the trade, and you completely ignored it because you got completely focused on that regard of, yes, news came out. News was worse than it was higher than expected, which you mean kind of worse than the market was anticipating. And in theory, definitely, it should just continue to the downside, especially after such a big move. A move down, which is exactly one of those situations where this being married to this bias can actually lead us to a few losses if price doesn't start moving into that direction, because we start forcing price over and over again to do something that for us it makes sense. However, price is literally not showing that. Which can be a problem, right? So we need to implement in our daily routine exactly that, right? How to approach the session, what is our game plan, and when actually, I think it's important to have a bias. It gives you some alignment of some vision of what to expect and what to do, some game plan of execution. However, yeah, maybe having one or two scenarios played out, it's maybe the best idea, and define exactly what you'd like to do, or what validates or invalidates that bias. We try to cover sometimes a little bit during the morning call. We try to cover a little bit that scenario as well. Like, yes, I can see I can see maybe more, let's pretend more move to downside on the indices. However, this high, let's pretend that price was just moving like this. Price was going down. Price is retracing now. Yes, I could maybe see price maybe retesting this size and gone down. I could see more bias because maybe this was actually broke something in here. However, if by any chance, if these highs are broken, that would kind of invalidate maybe my bias, or something else needs to happen in order then for me to actually continue to look for those for that sell opportunity. Otherwise, maybe I could just flipped, and then depends on your strategy. Are you going to go straight away to go long, or are you going to wait for some other confirmation that actually tells you, yep, price is actually about to continue to go higher and higher from here, because price could easily just break this highs, go down, and do this before actually continue to go higher. So having a higher time frame view of key zones that may actually make price stop and flip, that's important. That goes from higher time frame, and then having that bias of the short news and so on. But then the execution, right? The execution, for example, and this actually has been a big one of the biggest improvements on my own trading as well. It was to define, like, one thing is your trading plan, and then the execution, and then on this execution part is what exactly do I want to see in order to execute the trade. And this can easily help us with your own bias, because if I was just trading without too much confirmation or without almost confirmation, I would be just trading my bias, and I'll be looking exactly for that. Maybe I'll just be continuously looking for these sells that, for example, that you did, right? But because I'm waiting now for this confirmation, I'm being patient to actually wait for price to show me that it wants to reverse, that it wants to do, that it wants to reverse. I mean, that it wants to maybe break some lows in here and actually continue to downside, because I'm waiting for that, being patient. I follow price, and this is where I should be looking for the sell. However, price never gives me that. Okay, so there's no sell for me. Price just broke the zone that I wanted to sell it. Okay, no problem at all. Let price start moving. Let's find the next opportunity. Let's find the next zone on the left side that maybe price wants to react from, or flip it, and maybe let's try to find opportunities actually to go long, right? So because of this execution of waiting for some confirmation, it helps me to even avoid some losses, a lot of losses, to be honest. And that's why it's important to wait for this extra confirmation when you are executing the trades, because just this process alone can help you to confirm or not confirm the bias that you had in the first place. Yeah, does it make sense, Mohammed?
Yes, a lot.
Yeah, because sometimes it's exactly like that, like, and that's why I start being a little bit more in favor of looking for these confirmations during the execution, and then entering as price is showing me that it wants to reverse, instead of just placing sell limits or buy limits. Because as you have seen during my analysis, I pay attention to some key levels. However, it doesn't mean that I'm going to just place a sell limit at around this supply level. Maybe price is going to react from there, maybe it isn't, but I'm not supposed to place a sell limit in a zone that I think is strong for price to react from. I actually want to see some approach, right? I've been talking about the approach, about the compression on approach, about maybe breaking some lows on the way, maybe going there in a 3 times divergence, something like this. So you want to try to identify those kind of price patterns that maybe lead to actually show you that price is about to reverse, because price could easily just react from here and then break it and now make it work, but on the opposite side, instead of as a short, now be actually good level to look for as a long. So these, for example, these zones that I mentioned, sometimes they look like my own. This is maybe a bias that I have. However, I'm not trading my bias just like that. I want to see extra confirmation, extra confluence into before even executing the trade. On the other hand, I'm totally okay if price just goes there, spikes, and just completely moves down. It's okay. There's going to be more opportunities for me, and that's not off. That's now how price usually moves. Maybe occurs maybe 2 out of 10 times. It's like that. Price just goes, touches, and goes down. The other 8 times, I will actually maybe have some kind of confirmation to be able to catch that move. So in that regard, it's okay, at least for me. Yeah, so higher time frame and bias, maybe doing that exercise of starting from the weekly, take a look, maybe create straight away 2-3 scenarios of what would you like to see, expect from market, to how market will behave during that next week. Maybe take a look as well of news event for the week. Maybe you can just select the red ones from Forex Factory. You can see, okay, this week there's going to be such and such. And maybe, for example, maybe there's going to be some interest rate decision on Australia. Maybe there's going to be GDP data in US. Maybe it's going to be unemployment in UK. Maybe it's going to be CPI in the Eurozone, whatever news there is. But as you, and then one is on Tuesday, the other one is on Friday, the other one is on Thursday. And by being aware of those big news events as well, you can also start creating your own scenario of, okay, so this is maybe what I would like to see Euro doing until Wednesday, when Wednesday there's going to be this big news event. And after that, if price does this and that, this is how I'm going to approach that trading day. And this is how maybe I try to capitalize on it. And you can use a little bit of the fundamentals as well, maybe what you are expecting from the news, and so on and so forth. So from that weekly, now you can go to the daily. Let's take a look. This is my game plan for the day, regardless of the sessions that you do. Is it London? Is it US? When do you have time to trade? Whenever you have time, you could try to create your own scenarios for each moment. And again, what does it validate your bias? What percentage do you think is going to be allocated to that? What invalidates your bias? Are you going to flip it straight away, or there's not enough confirmation and everything you do is, okay, I'm just not opening any trades at this point because I don't have any other bias to where price wants to go next, and so on and so forth. So having everything like this well structured, it's a good exercise to do. It's a really good exercise. There's going to be the benefit as well that you're going to start as your analysis starting to play out, regardless of if you manage to trade it or not, you're going to get more confidence on your own analysis as you're doing this exercise. So it's also interesting. And then go back as well, like, okay, this was my game plan for the week, and this happened, this and this didn't happen. Like, why? Like, start asking questions of why. Why price didn't do this, or why market reacted this way, or why there was good news in here but price behaved to the other side, right? So you can get a little bit curious and asking some questions in order to improve your own analysis. And then goes for the execution part, right? So you have your analysis, you play out your scenarios weekly, intraday, and then goes a little bit within your strategy and your execution and confirmation that actually is going to provide you a good entry in alignment with your bias. If you don't ever get that confirmation, that's a great indication that no problem at all. I actually managed to avoid like 1 or 2, 3 trades, which is perfect, because now I don't need to win again 1 or 2 trades just to recover those 3 trades that I just lost, which is a win-win as well in the end. Yeah, not sometimes it's always better to almost stay at zero than actually lose trades just because especially if they don't follow your trading plan. So Any other questions, Mohammed?
No, not for the moment.
Yeah. How would you then approach now? Like what would you implement now in your own daily routine in order to prevent from this?
I think the most important is to wait for the confirmation. Yeah, because on the second and third trade, I was like too keen of entering the market, and like maybe wait and trade, like as it's not wait and trade, and like wait for confirmation. Secondly, make several scenarios of what could happen, what could be the turning point of the market. Yeah, I think I will implement that. Like maybe like even like think after every trade I had, like is the scenario still valid? Take the time, take the time to think if the scenario is still valid, if if the market is not showing me that maybe your bias is wrong. I think that that thing could be implemented to avoid these losses that I had, like due to the strong bias I got that day. Yeah, exactly. Yeah, so confirmation, different scenarios, and like maybe thinking about like what is happening. Am I good now? Am I in a good yeah? Because basically, like when I take the second trade on the S&P 500, like it was a buy, it was a sell stop, but I changed it to market order. I don't know why. And the stop was the entry was below the low you show, like below the show. Yeah. So normally if like if I was still like following that scenario that I had like in before, I never had been executed. Like
Exactly.
yeah.
That's it. Actually, I use that. I've been using even more and more that sell stop or buy stop entry because I'm slowly trying to get a little bit more into trend continuations as well, and sometimes even as a reversal. I like to get that confirmation to okay, if price actually breaks this low, and again it gives a little bit that confirmation. Imagine price about to reverse. If price actually breaks this low, I'm short. If it never breaks this low, it just continues. My order actually never got executed, and I don't mind that my bias is wrong at this point, right? Because ultimately we want to make money. We don't want to be correct for our own egos, right? That's not our goal. And that exactly goes with the discipline, right? Now that you mentioned that you're looking for that sell stop, that will be exactly a good approach. That's a little bit aggressive, but at least you are respecting, and at least you are waiting for that confirmation of one low being broken, which is perfect. Like in this case, it was literally a FOMO situation where you kind of got afraid of missing it or whatever, and you had to just to get
exactly.
to get a better price, but without confirmation, and you just force the trade without even entering, right? Yeah, exactly, right. And in this case, it will be the sell stop. Actually, it's now if you want to talk about technical ways to try to take advantage of this or to wait for confirmation, sell stop it's a beautiful example of how to execute your entry with that confirmation, because price needs to break. At least you should be looking for execute your trade after a specific low that you want to be broken. Okay, perfect. Now it's broken. At least now I got my trigger. Even if it's just at least a fake out and price just continues, at least you still had that confirmation. It's not going to be that often that price will just fake out and just continue. More often than not, especially after a big move like this, they're going to have that break of our most likely price actually is going to continue. If price is just respecting every low, then price will just continue. So that gives you that extra confirmation, right? And in this case, you will just be waiting to see this price actually wants to go down. If it goes down, I'm in. If it doesn't, I'm not short, and it's a win-win. I don't mind, right? It's perfect that you actually mentioned it. Yeah, so it was a double mistake, right? Initially, it was even a well-thought process, but then it literally, because of FOMO, most likely.
Exactly, that was FOMO.
Yeah. Yep. Yeah, especially because we literally just broke a new high. Yeah, just waiting for that break, at least to see if price actually is having any intention to reverse or not. Yeah. Yeah, man. And exactly like that. Implementing, and again, trading after you have your strategy, after you know you manage to be able with experience and so on. It's all about these small things, right? It's all about these small details that avoid us to have these losses that are unnecessary. Having a loss because we follow our plan and it's one of those trades that, okay, they're not going to be 100% right all the time, even if you are 50-50, it's okay. Then you play the odds with the risk reward and so on, and most likely your strategy is going to play out. The problem is all these small details of being married to the bias, or now I have 1 or 2 losses and I'm all of a sudden I'm revenge trading, and I add maybe 2 or 3 more losses into the equation when I shouldn't, or you are into a good trade, and because you get a little bit scared because price may have retraced, now all of a sudden you just close your profit, and price eventually carry on and will go to your final target. So maybe you got 1 hour from the trade instead of the 2 hour or 3 hour from the trade, right? All these small details is actually what eventually it's what's separating to achieve that consistency that you want, is these small details. And it's important then, as we have been mentioning, the journaling part, right? To write down the mistakes that you are doing, not just identifying the mistakes, but also ask the question, what can I change, or how can I improve this, right? What can I do to not repeat the same mistakes? What's going to be the new thing that I'm going to implement in my own trading plan that can help me to prevent these mistakes? Or what can I add into my daily routine? For example, playing out scenarios for the trading session that can help me to avoid keeping the same mistakes. Because then, okay, I committed this mistake, I had these 2-3 losses, but hopefully from now on, I will be able to maybe not get the short from the CPI and I will not make money from this short, but at least I'm not going to end up the session with 3 losses as well, right? So at least I'm not minus 3R. I'm 0 at this point, which is better than being at minus 3R, and just continue to look then for the next opportunity, a valid opportunity to actually make money. Because all these small mistakes, all these small errors, because then you are in a chasing game. You make a little bit, you got 2-3 good trades, and all of a sudden with a few small mistakes, you are giving all the money back. And it's all about that discipline, that consistency. That's going to help you to achieve. At this point, eventually, it's not going to be about a new shiny strategy and so on and so forth. It's doing the daily things on a regular basis. Higher time frame analysis, being disciplined, create your bias for the session, know exactly what kind of execution you like to do, and then execute it, and so on and so forth. You have 1 loss, 2 losses, it's okay. If you start feeling that you are not performing that well after 2 or 3 losses, define that rule for yourself. I'm not trading after 2 or 3 losses. That's it, done for today. And like define rules that actually is going to help you that's going to help you to your own weaknesses. That's why rules are important, actually. Yeah. Yeah. Yeah, man. Any other questions, Mohammed? Yeah. Yeah, not for the moment, right? So exactly that. So yeah, next time we have this kind of almost a one-to-one mentoring, but next time we have a private mentoring session, we can work a little bit on that regard of how to define your bias, and if, or actually I want to see how you have implemented that. You can have a more a deeper or carry on this topic. It's going to be interesting to see. Yeah. So that's it. Yeah, you're welcome, man. Thank you for the topic. Actually, it's a good topic, and you were trapped into that bias on the S&P on Thursday, and I kind of got trapped in the other side of maybe changing my bias way too fast on Friday. And the main reason, again, it's at least on my second scenario, it's not being aware of the higher time frame picture and just getting lost on what you are looking at lower time frame, especially if price all of a sudden is just moving fast up and down. We can get trapped really easy, and it's mentally exhausted. I was exhausted by the end of Friday of just chasing price up and down, not being able to actually being 1 or 2 steps ahead of the market. I usually managed to do that, but on Friday it was exhausting. Yeah. Okay, man. So yep, that's it. Yeah, thank you guys. If you watch the recording, just give it a thumbs up or let me know your thoughts, and what are you doing as well. How do you deal with your daily bias for when you approach trading, and if that's something that you are implementing in your own daily routine. So thank you guys. Thank you, Mohammed, man.
Thank you, Pedro.
Yeah. No, on Friday was the euro that I was just changing price. I actually got I got where was it? Where is euro here? I got one loss, but then I got a small win on the pound as well, but I never managed to catch the best entry, which should have been somewhere in here. Actually, then predicted it or identified that this was a good zone, but actually got short in here. Price was moving, but then just prepared to next one, stopped out, price just reversed. So I got short somewhere in there, and target was maybe somewhere in there. Yeah, it was just a loss, and it was a loss maybe of exhaustion. This would have been a great sell, and I noticed this level. I already didn't trade it, and then I never managed to trade again on the euro. And then, as I mentioned before, I got that $7 card at the highs, but it was weekend time, and it was a break-even trade. Yeah, somewhere in here. It is what it is. Yeah. Okay, guys. Thank you, Mohammed. I'll see you guys tomorrow for the morning call.
Thank you very much. Thank you very much, Pedro.
Bye, bye.
Bye. Bye. Thank you.